Hello, in our conversations with Africa's CEOs, today we speak to Hubert Danso, a leading voice in African investment strategy. He's the chairman of the Africa Investor Group. We take a look at the African investment landscape, explore how BRICS nations and African states can collaborate to drive sustainable investment in infrastructure, enhance trade, and also boost Africa's role in the global economy. We'll be looking at the opportunities and challenges shaping the continent's growth, as well as the importance of strategic partnerships. Hubert Danso, good to have you on the program. Welcome to the BRICS Africa Channel.
Thank you very much, Peter. I'm glad to be here. And I have to, first of all, congratulate you on your impeccable choice of tie. No, really great to be here. Really great to be here.
Fantastic. Hubert, tell us about Africa Investor. What inspired you to found it?
Well, Africa Investor is an institutional infrastructure investment platform for African pension and sovereign wealth funds to get better access to African infrastructure as an investable asset class. And, we really established this platform over 20 years ago with a very clear vision and incentive. We absolutely saw and believed that Africa was really much more perceived to be a development project for the world and the multilateral development banks, as opposed to the way that we saw it, which was much more of a globally competitive investment destination. So one of our key goals was really to, how can we drive a much stronger relationship between asset allocators from across the continent and internationally to really drive Africa's growth. And within that, how can we really continue to position Africa and our strategic role in the global green industrial economy, driven by private institutional capital as opposed to development finance, which some of us call subsistence development finance, because we're never really supposed to get out of the paying back moment instead of the growth opportunity. And then, of course, there are a lot of different investment gaps and dynamics that are perpetuated through lack of good quality risk-related data. And so we actually have a very strong research business that actually, brings that data together, researches that data, and puts it in a form that asset allocations can be made against that. And I'll just finally end on this point, Peter. We've always anticipated and seen, just understanding global economic dynamics and geonomics, we've always understood and anticipated that we are going to be moving towards a much more multipolar world as opposed to a unipolar world. And the global south, as people like to sort of describe us, we anticipated that Africa is going to be playing a very big strategic and important role because of our natural capital base, our sun, our wind, and our sort of hydro capacity, notwithstanding our youth bulge that's going to be 50% of the world's workforce. There's going to be 3 billion of us, as you know, by the end of the continent. And then, of course, our ability to be able to drive green technology manufacturing from the continent into an expanding and very rich 10 trillion per annum and growing global green industrial economy. So our view is, as long-term asset allocators, how can we already begin to start moving the continent from a development project that's much more, development finance and subsistence development finance oriented to a long-term strategic asset allocation opportunity that ensures that Africa becomes a reliable and stable piece of long-term investors' portfolio. So that's really what's brought us here, and it's been going very well, I have to say.
Hubert, is the message getting across then? Are people looking at Africa differently when it comes to investment?
Yes, and I think that's a great question, Peter. And I think the key word, what you've just mentioned there, is people. Because we instinctively always presume that the continent needs to go through this development community to attract capital. But people to us are the very astute and experienced long-term institutional investors who are investing for the 30 to 50 to the 100-year cycles. And the message is absolutely with them. They know that China is going to become a #1 economy by 2050, if it's not effectively that already today, depending on how you analyze the data. Everyone understands, again, all of the competitive resources, both human, financial, natural capital that the continent has. It's really just been who is helping navigate and interpret and intermediate that private capital's mandates with the needs and the opportunities represented on the continent. And that's where we bring, a number of different sort of value propositions and increasing new products and investment vehicles and data sets to create those risk-adjusted portfolios that are aligned. We call them institutional investor-public partnerships. Never heard of before in the continent. And interestingly, you're now beginning to see it around the world in emerging markets and developing countries because, no one's really put the priority around, for example, in China, how do we work more closely with the China Investment Corporation, almost like the institutional investment arm. And similarly, in the equivalent in Brazil, the institutional investors in India and Russia and elsewhere. That is the community. When you say people, those are the people that we work with, the deep pools of capital, and globally. And I'll just give you a bit of a contrast here. If you look at the development people or the development community that's been out there that we've been relying on, that is a collective balance sheet of about $1.5 trillion globally. Now, if you look at the private institutional assets that we work with that are looking for the types of opportunities that we can help them intermediate and participate in, that's a $300+ trillion balance sheet globally. And if you look at where our leaders tend to spend a lot of their time, we often say that our leaders are spending 90% of their time working with development institutions that can only deal with about 10% of our financing needs, leaving a 90% gap. And we're spending less than 10% of our time working with the 300 trillion pool of institutional assets that can close 90% of our financing and investment opportunities. So I think we've just inverted that, and we have a very receptive and growing constituency of asset allocators that are looking to decarbonize their portfolios. They realize they have to do it in a market that has energy abundance like ours, that has growth prospects like ours, and that has, funnily enough, very low levels of good quality infrastructure so that we can leapfrog, legacy infrastructure related issues and become a real trailblazer in some of these new high-tech infrastructure assets, which are going to be very investable and are already in high demand.
And that leads me into my next question. And I think you've already sort of given us clues, and it's the investment areas. As a continent, I think we pretty much know that energy and infrastructure are probably the things that are needed urgently to get us going, to fulfill our potential. Is there money coming into that area?
Yes, absolutely. I mean, you're seeing a number of big, institutional moves now. I think, as I said, again, there's been a fundamental problem where we've been seen as the continent as a development proposition. And because we've been seen as a development proposition, we haven't really understood that everything has sort of been aligned to the size of the development finance budgets of development partners, or been assigned to the size of development capacity and budgeting from within our own sovereign governments. But the reality is that this is a mega trend. There's a mega trend around green industrial investment that requires trillions and trillions and trillions of investment just to get access to the underlying resources that we have on the African continent. And through some of our own political partnerships, through our own institutional investor-public partnerships, working with a number of our sovereign governments, we now have something called the Nairobi Declaration. And the Nairobi Declaration is Africa's equivalent of the Inflation Reduction Act in America as a market signal to both domestic and global institutional investors. It's on a regional level, I suppose, it's a market signal equivalent to the European Union's Net Zero Industry Act and their value addition partnerships. And investors are looking for these types of opportunities. And it was only really last year that over 40 heads of state from the African Union came together and enshrined the Nairobi Declaration as Africa's green investment deal. Now, this is about a $3 trillion pool of investment opportunities through nationally determined contribution projects. It's now got a framework within the institutional investor public partnership framework, which is much more about aligning the mandates of long-term institutional investors with governments that are looking for long-term private capital for programs as distinct from projects on a one-by-one basis, so we can actually get to that, formerly elusive scale and speed that we actually need to do that. And that's exactly aligned with how long-term asset allocation does, how long-term asset allocation works. So there's an incredible, and then you're seeing it from the Middle East, you're seeing it from, of course, right across our friends and partners, on the BRICS markets. And you're seeing that as I keep alluding to, this $10 trillion and growing global green industrial economy. If you look back at how we've been sort of pigeonholed as this little development project for a few multilateral Bretton Woods institutions, everything is about an inward-looking perspective. It's about within Africa, within Africa's resources, how can we do a little bit better? When actually there's a $10 trillion and growing global green industrial economy, which we're less than 2% of, and we're providing double-digit proportions of the key resources that are driving that industrialization. Now, this is what a lot of our long-term investment partners have been able to see as an arbitrage opportunity. If we can support the investment that goes into beneficiating those underlying critical minerals, and then build the infrastructure that can pay to evacuate on a good risk-adjusted return basis, the manufactured green technologies emanating from that, and then sell into the global green industrial economy, whilst at the same time transforming our energy systems and creating more green industrial skills and capacity. That is the long-term investment opportunity of our generation. And investors are, and again, if you then begin to get philosophical about it, every investor now knows, if you're interested in the Sustainable Development Goals, if you're interested in the Paris Agreement, everyone knows that unless Africa participates in this way as a leading green industrial technology manufacturing hub, the world will not meet its goals. So during COVID, we saw companies come together under this theme of stakeholder capitalism. How can companies be a bit more altruistic around, just sort of helping the broader environment? Now, within our constituency, and where our constituency is essentially institutional investors, we have a similar mandate and reality and fiduciary responsibility to our portfolios called universal ownership. That means that we can't invest in one part of the world and protect our portfolios because we're exposed to all of the externalities that happen anywhere and everywhere around the world. So when we act as universal owners, it's incumbent upon us to be able to invest in more unknown parts of the world just to protect our portfolios in known parts of the world. And that's why Africa and institutional investor public partnerships, where we have African pension funds and sovereign wealth funds working with Chinese pension funds and Brazilian pension funds and pension funds from across BRICS countries and the GCC, Europe and elsewhere. It's a very different game, and that's not the narrative that we hear often when we are talking about Africa.
So you mentioned risk adjusted there, and as an investor, risk is a big question. And Africa, if we believe the credit ratings agencies, is high risk. Is there research, is there data fair, or do you think that we have a better risk profile than perhaps is perceived?
Well, look, I don't think we have a better risk profile than perceived. I know we have a better risk profile than that's perceived. If you look at the Moody's data, Moody's have done many studies which actually show that Africa is less risky than most European markets for infrastructure and project finance. The data is in the market. It's absolutely unequivocally been tested, is unequivocally been updated. In the last 2 months, there have been more reports that basically show that there is an unfair risk premium attached to investing in the African continent. That's one thing. The World Bank, IMF annual meetings produced a lot of information which showed, again, the recovery rates and the default rates for Africa and emerging markets are the same as for developing markets, I mean, developed markets, I must say. So there is no difference. It's this lack of asymmetry of information that really just has benefited some constituencies so that they can continue to sell development finance loans as opposed to enfranchise and scale the participation of long-term institutional private capital. So, but it doesn't mean that Africa doesn't come without its risks, but those risks are the same that investors are taking routinely. And the detrimental impact, just to give you an example of the multilateral development banks refusing to honor the G20's mandate to democratize and make full access to this GEMS database to the institutional investment community. It's been estimated that it's costing emerging markets and developing country governments in the region of $15.6 billion of excess interest on loans each year, and even more in lost opportunities because that data has not been shared comprehensively with investors. So, it's a challenging situation when you are confronted with these opportunities. And then if you look at it from the infrastructure investment perspective, Africa has about $3 trillion worth of climate and green technology related infrastructure investment opportunities to meet our nationally determined contribution projects. And these are all the projects that governments commit to each year. They then go to the big COP summit. It will be in Baku this year. It was in Dubai last year, and next year it will be in Brazil. Global renewable energy investments for the last 20 years were about $2.3 trillion between the year 2000 and the year 2020, which effectively means our 3 trillion means that we now need in Africa to mobilize more investment for our green infrastructure in the next 6 years than the world was able to mobilize in the last 20 years. And of that 2.3 trillion that was mobilized for green renewables in the last 20 years, only 2% of that came to Africa. And the reason I'm mentioning it now is because a lot of it has got to do with this misperception of risk. So, there are very interesting dynamics at play here around this. And this just goes to say that assets will be allocated at a much different level going forward, just because of the global dynamics of every institutional investor trying to do two things as universal owners. One, decarbonize our portfolios at scale. And two, as universal owners, seek to ensure that our decarbonized portfolios can green the industrial economy and the real economy. And fundamentally, I'll just close here, and fundamentally what that means for us in Africa, using the development dynamic to our advantage, it simply means that our governments, through the Nairobi Declaration, Africa's Green Investment Deal, have said, we're going to use green industrialization to stop trying to make investment developmental, but rather to make development investable. And that is the transformation that a lot of the market hasn't really understood. And it's a watershed moment, Peter.
We're running out of time, so I'm going to ask this last question. As the BRICS Africa Channel, we're obviously interested in how the BRICS nations look at each other. And I just wonder if, with the introduction of a few more countries from the continent, and one hopes that there'll be more going forward, and you talked about the South-South, has BRICS enabled investment into the continent? Are we seeing more investment from China, from India, from Russia as a result?
I think I might even look at rephrasing that question just a little bit. When we talk about more investment, we tend to look at it in terms of development partner type arrangements. I think the exciting thing about BRICS is that BRICS come with a very open mind to fellow member countries and the so-called global South. And look, we don't look at it from we don't believe in global South. We don't believe in global North. We believe in the global green industrial economy, which is a $10 trillion per annum and growing base. And I think when you come with a partnership mindset And when you have your own asset base, when you have your own consumer dynamics, and you can work together in a framework which we have described as multipolarism. And multipolarism, Peter, is a new model of cooperation. We're currently sort of operating in this dynamic which basically says, I'll compete with you, or I might fight with you. And we're saying, let's figure out how we can cooperate a lot more. So, BRICS countries and other regions can say, how can we work together to satisfy our own development needs? How can we work together to satisfy our own finance and investment needs? And that's usually where it stops. But multipolarism has this third leg, the third leg of the stool, which says, how can we then combine and compete to increase our share of that $10 trillion global green industrial economy? And I think the best is yet to come from BRICS markets, providing the leadership around this new multipolar industrial economy.
Hubert Danso, founder and CEO of Africa Investor. Thank you so much indeed for joining us on the BRICS Africa Channel.
My pleasure, Peter. And again, congratulations on an excellent job that you're doing there.
Thank you very much indeed.